Right. Good afternoon, and thank you for joining us. I think my last YouTube of the year, certainly before Christmas. So Merry Christmas, one and all. I hope you've enjoyed the Christmas festivities. We certainly have. Yeah, all living to tell the tale. Let me shut myself down on here so I don't have to listen to my voice. And yeah, we've got some decent action really, for considering the volumes are always likely to be a little bit low. We're not encouraging people to overdo it this week leading up to Christmas. There are a few bits. I'm sure Jerry will be on with you on Thursday, giving a little bit more about what's going on with the core PCE, the Fed's favored inflation metric, on Friday. Between now and then, we've got a little bits of data out, not a huge amount. European consumer confidence out later, CPIs out in Canada, and consumer confidence as well out in the US tomorrow afternoon at 3 o'clock. If you were looking to trade data, they may be the best ones to keep your eye on. But let's talk about a little bit about what happened earlier on this morning. For those of you who are aware or awake at 3 a.m. For the Bank of Japan interest rate decision and press conference and their monetary policy statement, more importantly, there were some big old moves, as we talked about this morning on the Zoom. So as you'll see from this, the policy rate didn't change, right? As expected, we were still sitting at this minus 0.1% that we've been at all year. When every other central bank is raising rate, the Bank of Japan is not. However, we had seen the Bank of Japan be pretty high on their interest rates, well, the yield curve control, as it's known. They've been very keen at keeping the JGBs, which is the Japanese 10-year, capped at 0.25%. This was pretty accurately or pretty well adhered to by the Japanese central bank. They managed to get themselves, whenever we got up towards these sort of levels, they managed to buy some bonds and manipulate the price lower. But at some stage, there were always going to be some issues that we're going to see some potential market runovers of these levels. And eventually, they're going to run out of bullets, right? They only have so much money they want to burn on this. If they keep buying the bonds and people keep selling them, then you're just kind of feeding the market, right? So there was always, and we talked about this earlier in the year, I'm sure if you go back through some of these YouTubes, you'll pick it up, that we're talking about this yield curve control potentially being moved. And that's what happened overnight. They stated that they're now happy to accept yield curves anywhere up to 0.5%. Hence this little alarm in the chart here. But we had a big spike in the JGB bond yields. What the Bank of Japan is now allowing yields to get this little bit higher. So this is we have one of the fallouts from that decision overnight. This big news that's been kind of muted for part of the year really, and finally they've come through with this. There is some interesting. Well, let's have a look at the dollar yen, should we, first of all, because this has been one hell of a move today. Looking in at the lower time frames here, and clean this up a little bit for you, so you can see a little bit more clearly. But at 3 o'clock in this morning, we had that release at 3:01, I think it came through. And the dollar yen has been sold off aggressively as the yen appreciates in value given those high yields that have come through today. And there's not been too many bad sells on the dollar yen or any of the yen pairs really today. Any strength has been kind of sold in or bought into on the yen, sold into on the dollar yen. Obviously, the dollar being priced first against the yen, this represents yen strength. So yeah, pretty nice action. And it wasn't something you needed to be particularly quick off the mark on either. I mean, not that I was up for this, right? Young kids means that I'd take all the sleep I can get. But if you were even a minute late to this, even 2 minutes late to this, you were still able to get in at some pretty nice prices without ever really being threatened at going down to or going back to your entry price. It was pretty consistent action. And any little pullbacks we've seen have all been sold into quite aggressively. But a bit of a sea change here. That this is such a big thing because we talked about this on the Zoom this morning, but I'll recap it. Japan have basically been financing the carry trade, the financial world, with their low yields, right? You can borrow money in Japan for very little money, effectively, and you can invest it elsewhere and get a high yield on it. And this is called a carry trade. And this is kind of not only working with bond markets this year, but this has been working with stock markets for decades. These yields in Japan have always been particularly low. So people have always borrowed money over there, got that money out, hedged the FX position, and got themselves some pretty cheap money with a view of investing it into other more risky assets, or sometimes other risk-free assets that you can do at the moment with these high yields. So the fact that they're now moving on yield curve control, perhaps this is the window that they might start to raise rates as well. And maybe that's the end of this huge pump that we've seen based on Japan basically financing the global economy. So yeah, really interesting moves on that overnight. And yeah, if you were up for it, I'm sure you managed to catch a little bit of it. So well done. Other data we've had through retail sales and core retail sales were a little bit mixed. In Canada, we've had some downward revisions, not too significant, only by 0.1 in each case, slightly better on the core retail sales, slightly worse than forecast on the retail sales themselves. And again, mixed data on the building permits versus housing starts. The permits tend to kind of be a bit of a leading indicator on the starts. Obviously, if you're not doing more permits, you're not getting more starts. So yeah, this is maybe one to kind of show that these rates are starting to impact the housing market a little bit, albeit the housing starts were still slightly better than the market expected. So not too much to move the needle just yet as we move towards the open in the US. And yeah, consumer confidence out of the Eurozone later, not the biggest piece of data. I'm probably not going to be trading that one much myself as we go through the remainder of the day. In other news, we've had literally in the last 20 minutes or so, there's been two decent shakedowns in the, where are we? In the energy markets. If we take a look at the Freeport, so Freeport has submitted plans to the federal regulators to restart long shut LNG export plant in Texas. So for those of you who are familiar with the natural gas market, natural gas prices in the US are a fraction of the natural gas prices that we're paying in Europe. You want to look at the Dutch natural gas, the TTF. It's on ICE exchange, so it's not something you can easily get a live price on without paying for the feeds, which I don't for that market. But if you want to have a look at the natural gas prices in the US, you've basically been able to kind of get, well, in theory, these prices don't normally decouple too much. If the prices of natural gas in the US are cheap and they're very expensive in Europe, well, normally then you get a lot of exports from the US taken in these liquefied natural gas tankers over into Europe, and that feeds the supply and brings down the price over in Europe. What's happened is Freeport is the biggest liquid natural gas export plant in Texas, and it's been shut down, I think, since June of this year. So yeah, over 6 months, and they're now looking at potentially, I know there are rumors that they might be back by January, and now we've actually had the submitted plans to the federal regulators to say they are indeed ready to go on this. So that might start to get a little bit easier for the natural gas market in Europe. Obviously, natural gas is a tricky one. A lot of our natural gas has been coming previously from Russia and no longer is to the same degree, especially since they've or someone has blown the pipeline. So yeah, a lot of that could be a bit of a sea change again in the natural gas market. At pretty much the same time, we've also had the Keystone pipelines have submitted plans to their federal regulators to restart the US Canada oil pipeline, because that had a leak recently. Maybe not quite as big a move or as big news, but again, there's more supply likely to get into the market as a result of that. So if we look at the natural gas in the last few minutes, we've seen the volume kind of tick up. Looks like people were onto this pretty early, and natural gas prices in the US coming off, and with the extra supply in the oil market from the open at 2 o'clock, the NYMEX opens for crude, and we are off a little bit softer since that's come through, albeit a little bit like in the last couple of minutes. So yeah, interesting moves in some quite eventful things going on really with the BOJ and these two moves, especially the Freeport one. I think will be quite significant. So yeah, that's what we're looking at in terms of the news flow through the day. So let's take a look at where we are in the markets here. We've obviously had a big sell-off on this Bank of Japan thing. This is the S&P 500 on the top left here. For the daily volume profile, we had a big sell-off and managed to kind of get ourselves back almost towards the highs that we had prior to that 3 a.m. washout as the market started to fear for global liquidity. The Dow, in fact, managed it. If you look here, the Dow managed to get back to its point of control for the day and has since eased off a little bit as well. So interestingly, poised markets, the fact that they've managed to garner a lot of this back so quickly puts us in a pretty interesting position. So yeah, one to watch, but I wouldn't be looking too aggressively at trading this yet. I've got a high volume node up at 26s, which is also where the value area high is for the S&P 500. Similarly, we haven't quite got down to this high volume node down at 3764. Maybe mark those levels on your charts if you're ever going to trade anything on markets lit for liquidity, even more during times of low liquidity, right? And these weeks of leading up to Christmas and over holidays tend to be a lot less full of liquidity. That gives you a little bit more in terms of stop runs as well. Also helps if you can know a little bit about where all the order flow is as well. And we've got some really unusual sized orders all in below where we are currently, just leading into the open. We're at 36s on the CME futures for the ES, the S&P 500. And as we watch the market come to life, it'll be interesting to see if these levels hold or they can soak up all the orders that are down here. We've got orders of 150, 192.15 coming in and out. Yeah, pretty chunky areas of flow. So this often can support markets when you get these orders coming through. So curious to see if it can do it on a low volume day today. So let's see how that impacts in the markets themselves. Taking a look at the S&P 500, we are off a smidge, but not too much. NASDAQ off a tickle as well, relatively unchanged. So not the most dramatic first 40 seconds we've had in US indices this year, that's for sure. But perhaps a little bit of support beneath. And if we do give these levels out, I'd be curious to see what happens to the order book as we look forward. So as we're looking at this, this is an opportunity to say thanks for joining us, I guess, throughout the year on the Educated Trade YouTube channel. If you haven't already subscribed, then please do so. So when we do go live, you can get notified pretty quickly. But yeah, it's very much appreciated, all your likes and comments. So yeah, do keep with us. And yeah, hopefully we can bring you some more useful content into the new year. If you haven't already signed up to be part of our discussion group, you get these Zooms. We do these Zooms twice a day, every day. I only do a couple of them each week on YouTube. So yeah, if you haven't already done so, please get in touch with us via various channels, YouTube, Instagram, you name it, and we'll be able to help you get more of this sort of content, which we do before the European Opens and before the US ones, like we do at the moment. So yeah, let's have a look back at the order flow. We are currently seeing a little bit of it soaked up, but we've kind of stabbed down into this volume area, and since seeing a little bit more buying coming through. There is the cumulative volume delta has been pretty weak there, but we are starting to see the bit more of flurry in terms of bids coming through. Yeah, that was able to soak a bit of liquidity out around that 31 level, but quickly jumped 5 ticks from there. Yeah, nice that it showed a little bit of grabs for you in that first couple of minutes of trade. So yeah, this is an interesting level. If this goes with the amount of orders that were there, then they can obviously get book flips. But failing that, I think it could be reasonably well supported. But yeah, not trading too much today. Let's see how the rest of the week goes. Try and wind yourself up a little bit, wind yourself down, should I say, a little bit into Christmas, and have a nice time over Christmas and New Year. I'll see you again probably in 2023. Thank you for joining us.